Good afternoon, everybody. This is Dennis with Active Trend Trading's After Market Monday. I want to welcome everybody to today's webinar. We're going to get started here right now. Draw my drawing tools back over to where they belong. Click it in. There we go. Interesting time in the market today. Remember that all materials presented are for trading purposes only. Traders should always paper trade any new method prior to the risk of their own personal capital. Had a great weekend. Got to meet a couple of our local traders. Mark, it was really nice to get to meet you up at Lenny's house. That was a really good time to be had by all. So let's see. Let's get going. The aftermarket Mondays, our objective is to provide timely, actionable intel at the beginning of the week for you to be able to make decisions moving forward into the rest of the week or even to the rest of the month. We do a real quick market review. We look at some stocks, some ETFs that may be setting up. Again, premium members will get the actual triggers to the premium active trend trading members will get the actual text and the email alerts when the setups happen and when I'm placing my orders. What else and where else to focus at? Remember, have patience, stand back, and respect the rhythm. Before we run over to get going on what I'm reviewing today, I want to show everybody on, if I can find it, there it is. Okay, hey, I just uploaded a brand new tech tip, and what I'm talking about is seasonality, a seasonality update for 2017 as of close of business on the 18th. You might want to take a look at that. If you, basically, you can become a member of our subscriber or follow us on YouTube. It's just www.youtube.com/C/Market Tech Talk, and it's totally free, but it's separate than the actual Active Trend Trading website. And with this one, what it does is just basically I post just some discussion, tech tips, how to make money trading stocks, and of course the aftermarket Mondays. And so if you haven't subscribed to that, and then you get just an email saying, hey, a new video is available for your viewing pleasure. So aftermarket Monday, stocks ETF setting up for August 21st. Big question that I have going into this week, because of this weakness that was shown in the market the last couple of weeks, do we sell into strength? And so it's something that we have to at least think about. When we look at the S&P, we'll see whether or not, or the spiders, we'll see if that makes sense. In other words, instead of buying the dips, we maybe want to sell the rips, or basically get ready to go into a bearish type position because of the structure of the current stocks. Seasonality expectations, September, August expectations. Basically, we've talked about that previously. August, most volatile month of the year. Historically, September, the worst performing month of the year. Is it time for gold? Gold may be setting up to move higher. A couple of ways I'll be trading gold. Netflix. Do we want to add Netflix to our list of potential stocks to trade? Is it setting up right now? So I think that should give us a really good coverage to move in. Let's go run over real quick to the charts. Let's see what we have going on here. There. Yeah, that's the one we're looking at. Okay, let's take a look at spiders first. SPY. Okay, guys, this, we put out the alert to buy for the early warning alerts last Friday. It was still a valid buy as of today. But what I'm looking at is it's even a better signal today than it was on Friday. We've got a hammer on the spiders just above support at the 100-day moving average, positive divergence on a daily chart, and and also momentum turning down a little bit. Mike has talked about it before. We've got this double cluster on the market forecast, which often leads to a very quick little uptick in the market. What kind of an uptick could we look at? Well, here's what I was talking about. Okay, the market has changed its character. As we see, we got a nice little pullback into the 50 a few weeks ago, beginning of June. We get a pullback into the 50, a rebound, but this rebound, the secondary rebound that we get here, is basically a very classical sell-off, reaction, fails to react back up to the past highs, and then another sell-off, put in a lower high, a lower low, and a lower high. That's a definition of a downtrend. And so we are at least in a short-term downtrend on the S&P, as represented here by the spiders. What could we anticipate happening in the S&P? Well, we want to, if you just take and throw and you can do this on each one. I'm not going to do it for everyone, but you can do it on each one of the indexes. So basically, we've got from here to there with the fibs. And look at this magic fib box right here between the 38.2 to 61.8 retracement. It could, the spies could power up into that very easily, and it's also going to coincide with the 820 moving average cluster, and so that's where I'd be looking for weakness to show itself again, is in that magic fib box. That's between the 618 retracement and the 38.2 retracement. Of course, it could power on up through that. Well, if we get up to the 50% retracement, what will that mean? How far will the spiders have run by the time it gets there? Well, let's take a look real quick. Well, that would be about, 1%. So if we're trading a 3-time leverage, that's about a 3% move. And on up here, 1.36. Throw on the U-Pro. Well, let's not throw on the U-Pro. Let's run right over to the Qs, because I think the Qs have a potential for moving more, and also TNA has a potential for moving more. As we see, we get kind of a stalling action on the Qs today. Today, kind of just, we pushed up slightly above the 8-day, then falling back down. We do have a TSI tick up. So again, similar type thing. Pull off to a new low, lower high, lower low. So Qs are the NASDAQ also in a sell-off mode. IWM. Oh, IMW. IWM. Very similar. IWM, really nice. It held on to its support there at the 134 level. We have positive divergence on both the true strength index, the momentum, and a little bit. We have a 3-line cluster here on the market forecast, which tends to tell us that within 1 to 5 days, 1 to 4 days, we should get some kind of a bounce. What kind of a bounce might we get on IWM? Well, rather than doing IWM, let's run over to TNA. What kind of a bounce might we look for? Again, we roll in on the fib retracements. And from top to bottom, there we go. Go back to our line. There we go, is our trend line. And so if TNA makes it back to its 50% retracement, well, or let's just go to 38.2, which is typically, if this is a bottom, where it has a strong likelihood to go to. Well, 38.2 is a, look at 7.67% move from today's close. 50% at 10.62. If by chance it makes it all the way up to the 618 retracement, that'd be about a 13% move. How long? Oftentimes they will have symmetry. Oftentimes I would expect some kind of move within the next 10 to 15 days as an approximation. It could extend out a little bit, but of course that could push up into the way I would look at trading this. If you are long a position in TNA and it pushes up above the 382 or up to the 50, rolling and put a trailing stop just below the 382 retracement. That's a good way to because once the entity has shown that, hey, I want to go down, because it is in a downtrend, but it is lined up to potentially bounce. We don't want to let it run up here above the 382, reverse, which would make it put in a, let's say it runs up to 53. 52. We don't want it to reverse and fall all the way back to where we bought it at. We want to make sure that we take some profit off the table. Okay, what were the other entities that we were looking at real quick? And primarily it was Netflix. Netflix is looking kind of interesting, guys, here from a longer term perspective. Okay, we are getting a nice bullish bull flag on a weekly chart, daily chart. Let's throw in a trend line across here, an approximation. Got that trend line working there. We're slightly below the 50, and so that brings into play a potential strong support at the 100-day moving average, which is, look right there, right at 160. It coincides, here's the conversion of clues, coincides with this past swing high. So we know that's a pretty strong area of support that we want to pay attention to. What else is good going on about this chart pattern? Well, one, the TSI starting to tick up, hasn't ticked up yet. Momentum, as far as this downside move, it's showing some positive divergence, and we get a two-line cluster on the market forecast. Longer term, and that same thing is going on with the weekly. The longer term concern issue, though, is of course that you have your momentum, daily momentum sloping down. Your weekly momentum, longer term momentum, is still has turned over. TSI long term down, momentum long term up on the weekly chart. So that's kind of interesting, and it may set up well for us going into the rest of the week. Let's see, what else did we want to take a look at real quick? Let me roll back here to the Netflix time. Oh, gold. Yeah, let's go to gold. So I'm hoping that these videos are and this webinar is fast enough for you. Here's the way I plan on playing gold. I'm going to go to first. I'm going to go to GDX, and I'm going to get rid of all my past drawings. I'm going to go over here to a monthly. I want to see a monthly on gold because on the monthly chart, gold is doing some very interesting stuff. There we go. And so I'm going to go over here. I'm going to maximize this cell and GDX. So that's that. But let's just go over to the gold index for the one of the gold ETFs first. Give us a longer term perspective on this. And is this going to go out far enough? I don't know. Yeah, it does. So if we go back to gold, has been in a downtrend here, guys, ever since 2011 time frame. So if we draw a trend line across here, back to the, it basically has hit there. If we draw them on down just a taste, as you can see what's going on a monthly chart, that gold is cracking back up through that longer term downtrend after after putting in a very nice new low at the bottom of the Keltner, move back up to the top, What's this? Higher low. It has not taken out this longer term low there, but now that we have that longer term concept that, oh my goodness, gold is taken out, is moving in the right direction, we can go back over here, and now we can start trading. That line, that downtrend line, becomes now a line of demarcation for trading, trading off of gold. And so then I look at that and say, okay, I've got a longer term trend line, downtrend broken on gold. Oftentimes it'll come back and kiss the trend goodbye. That's an old adage made up by the Warden brothers, those of you who ever watched TC 2000. So let's go to GDX. Here's a couple of ways to potentially trade this. GDX, a nice move, weekly, daily. Had a nice little, internal move, but it's sloping up nicely. It too has kind of broken. It's either breaking or it's breaking out of this shorter term trend line. So one of the ways we can look at GDX. Well, GDX has really great options, and so today I would be looking at going out maybe to January. And utilizing the intraday chart, but buy an at the money or slightly in the money call that expires in January 2018, with the expectations that in that time frame we could run either up to we could run up to 26, but we could also, if this takes a if it flies out of here in a very short period of time, like the last time this happened was back here, and in a period of how many days? Oh, it doesn't tell me, darn it. Hold on a second. In a period of, there we go, about 194 days. In other words, just about the time we take us through about January into February. That could be an excellent move. In that time frame, it jumped. In the case of GDX, jumped $18. I'm not going to say it's going to jump that much, but if we do break out of this triangle, come on, out of this triangle here. Let's look at what kind of upside we could potentially have. And I'm going to go with a straight triangle. Hence the art of trend trading. And we just take basically a string across there, activate it, move it. And if we break out there, where's our projected upside? 28. And so, a very, low cost option, or you can even just buy the entity itself, but a low cost option like the $22 call option that expires in January this year, and it could run up to 28. That would be adding about $5.50 to the value. So that could run up very nicely. So that brings us back to nuggets. Nugget, similar type of move as the GDX. So for Nugget right now, if given that gold is broken out, GDX is also broken out of the longer term trend, then I want to be looking for an opportunity to either options on GDX or get big on Nugget. So I'll be waiting for the pullback into the moving averages. It's moving back above the 50 here, which is very good. So we have a really nice level of demarcation there to trade off of moving forward. So, okay, that's what we have for today, guys. I hope that gives you some food for thought for the coming week. And we anticipate some good things moving into the end of the week. So until Friday, unless you also hear us on Wednesday, God bless everybody. Have a wonderful, wonderful week. See ya. Hey traders, this is Dennis. Hey, if you act prior to the end of August 2017, you can take advantage of a 40% savings on a premium membership to Active Trend Tradings. Give her a try. Thanks.